In a world where the quest for financial freedom becomes increasingly paramount, the choices we make today lay the foundation for our future prosperity. Welcome to Financial Bridge, your trusted companion on this journey toward economic empowerment. In today's episode, we're venturing into the heart of investment strategies, where we unravel the mysteries of building wealth through the Schwab U.S. Dividend Equity ETF, SCHD. With a history rich in potential and performance, SCHD stands as a beacon for those seeking to navigate the tumultuous waters of the market with grace and efficacy. But how does one transform a steady stream of investment into a vast ocean of wealth? Is there a formula, a secret pathway through which the diligent can tread to achieve financial abundance? Today, we're not just sharing insights. We're breaking down the essence of compound interest and regular investment through a practical, illuminating example that brings theory into the realm of the tangible. Join us as we delve into an illustrative journey, investing $1,000 monthly into SCHD and projecting its growth over the decades. While we anchor our calculations in historical averages, we sail with the understanding that the future is a horizon filled with both promise and unpredictability. Our compass? The compound interest formula. Our destination? A future where financial goals are not just dreams but destinations reached through the steadfast commitment to investment and growth. To set the stage, let's quickly decode ETFs for our newcomers. Exchange-traded funds, or ETFs, are baskets of securities you can buy and sell on stock exchanges, much like individual stocks. They offer a diversified portfolio in a single transaction, making them an attractive option for investors seeking balanced exposure. Among these, dividend ETFs are particularly appealing for their potential to provide a steady income stream through dividends paid by the assets within the fund. Enter the Schwab U.S. Dividend Equity ETF. Launched by Charles Schwab in 2011, SCD is a titan in the ETF arena, boasting over $52 billion in assets. Its aim? To mirror the performance of a carefully selected basket of dividend-paying stocks, offering investors a slice of the large-cap value segment of the U.S. equity market. With its remarkably low expense ratio of 0.06%, SCD stands out as a cost-effective route to broad market exposure. But what really sets SCD apart is its meticulous selection process. It zeroes in on companies that have not only consistently paid dividends for at least 10 years, but also meet strict financial health criteria. This ensures investors are putting their money into firms with solid foundations and a reliable dividend track record. The result? A portfolio of 102 heavyweight contenders, spearheaded by industry giants that promise stability and growth. Midway through our journey, if you're finding value in this deep dive, don't forget to hit that subscribe button. Join us on Financial Bridge, where we're committed to equipping you with knowledge to cross the chasm from financial uncertainty to security. Diving deeper, SCD's resilience in economic downturns and inflationary periods is particularly noteworthy. It holds stakes in recession-proof sectors, such as healthcare and consumer staples, ensuring a buffer against market volatility. Even in challenging times, these sectors have historically provided stable returns, thanks to the indispensable nature of their offerings. This makes SCD an attractive option for investors seeking a hedge against economic instability. But what about the performance? It's true, every investment has its ups and downs, and SCD is no exception. Yet, it's crucial to adopt a long-term perspective. Fluctuations are part and parcel of the investing journey, but SCD's fundamentals remain robust. Its focus on dividend growth and quality selection criteria position it as a promising vehicle for wealth accumulation over time. As we navigate through the realms of investing, it's vital to ground our strategies in practical examples. Let's consider an engaging scenario involving the Schwab U.S. Dividend Equity ETF, SCHD. Imagine you're committed to investing $1,000 monthly into SCHD, a decision fueled by its potential and historical performance. Though the future is unwritten, and past performance isn't always a reliable compass. Let's forecast using an assumed average annual return rate of 7% for illustrative purposes. This figure mirrors a common long-term expectation for stock market investments, offering a glimpse into potential outcomes. To crystallize our forecast, we deploy the compound interest formula, a mathematical beacon that illuminates the future value of our investment journey. This formula is articulated as FE tongue sticking out times 1 plus R NT minus 1 slash R, where FE stands for the future value of the investment. P represents the monthly investment amount, set at $1,000 in our scenario. R is the monthly return rate, derived by dividing the annual rate by 12. N equals the number of compounding periods per year, assumed to be monthly compounding in our case. T denotes the number of years over which the investment grows. Given these variables, and assuming our annual return rate of 7% translates into a monthly return rate, we set our sights on calculating the future values for investment horizons spanning 10, 20, and 30 years. Through this exercise, we anticipate witnessing the transformative power of consistent investing coupled with the magic of compound interest. For a $1,000 monthly investment in SCHD, assuming an average annual return rate of 7%, our mathematical voyage yields the following treasures. In 10 years, our financial seedling would blossom into approximately $173,085. Advancing to 20 years, our growing investment tree would stand tall at about $520,927. Reaching the 30-year mark, our financial forest would span a vast $1,219,971. These figures, while illustrative, underscore the profound impact of disciplined, long-term investing in a vehicle like SCHD. It's important to navigate these projections with the understanding that actual returns can diverge from our assumptions, influenced by market dynamics, tax considerations, and evolving dividend yields. As we anchor back to the present, let this example serve as a beacon guiding your investment strategy. SCHD, with its focus on dividend growth and a prudent selection of assets, presents a compelling case for those seeking to build wealth over time. While the future's contours remain undefined, equipping ourselves with knowledge and embracing the principles of regular investment and compound interest can set us on a path toward financial prosperity. As we conclude today's journey on the financial bridge, we invite you to ponder the potential that disciplined investing in SCHD can unlock. If today's insights have sparked your interest or illuminated a new path, consider joining our community by subscribing. Together, we'll explore the vast landscapes of investment opportunities, building bridges to financial success one step at a time. Thank you for joining us on this exploration. Remember, the journey to financial freedom is both an art and a science, blending knowledge with action. Like the video, subscribe for more insights, and together, let's chart a course toward a prosperous future.